All right, so the crypto market is absolutely buzzing right now. Bitcoin is knocking on the door of a new all-time high, and everybody's excited. But is this just another classic bull run? Or is there something, deeper going on under the surface? Today, we're going to look past the price tickers and dive into two massive forces, AI and regulation, that are fundamentally changing the future of crypto. Let's get into it.
So here's the number everyone is watching, $90,000. Bitcoin is hovering right around there. And yeah, a number like that, it gets the heart racing and it has everyone talking.
Which, of course, leads to the big question on everyone's mind, right? After the last few years of, let's be honest, pretty wild volatility, does a price tag like this mean the bull is officially back in the driver's seat?
Well, as it always is with crypto, the real answer is, it's a bit more complicated than that. The price? That's just one piece of a much bigger and, frankly, a much more fascinating puzzle that's coming together right now.
Okay, so for Act 1, let's just call this the new reality. We're seeing these incredible new highs, for sure, but the vibe in the market this time around, it feels, well, cautious.
Let's look at the hard numbers as of today, January 28th. We've got Bitcoin holding strong near that $90,000 mark, a level that would have sounded like science fiction just a couple of years back. And you've got Ethereum just kind of consolidating, building a base around 3,000. Now, these are really strong numbers, but they're not the crazy, off-the-charts vertical moves we saw in past cycles. It just feels a little more mature, like maybe this time really is different.
And this analysis from Saxo Bank really hits the nail on the head. The key phrase here is downside protection. What that means is investors are actually buying insurance, basically. They're buying options that pay out if the price suddenly tanks. So even while we're hitting these new highs, people are still spending real money to protect themselves from a crash. It tells you that the confidence is there, but it's not blind confidence.
So that sets the stage for Act 2, where things get really interesting. Because under all that cautious optimism, there are two massive forces that are completely changing the rules of the game. One is technology, and the other is regulation. First up, let's talk tech. And I'm not just talking about slightly faster blockchains here. Coinbase Research is calling the link up between AI and crypto a fundamental shift. And when you think about it, it makes perfect sense. AI needs a staggering amount of computing power. And crypto? Well, it offers a way to organize that power on a global, decentralized scale. This isn't just a small upgrade, it's a brand new engine for innovation.
And a huge piece of this puzzle is a concept called DePIN. Now I know, the name sounds super technical, but this Airbnb analogy just makes it click. AI is unbelievably hungry for computer power, especially for graphics cards or GPUs. DePINs use crypto to build a global network where anyone can rent out their spare computing power. It's literally an Airbnb for the digital horsepower that fuels AI.
And the crucial thing to remember is, this is not just some theory on a whiteboard. Real money is pouring into these sectors right now. The demand for decentralized GPU power from networks like Render is just exploding for both AI and high-end graphics. And you've got big venture capital firms throwing money at AI development tools and these DePIN networks that form the backbone of it all.
Now for that second game changer, regulation. And this slide just sums up this seismic shift perfectly. For years and years, crypto regulation was just talk. It was debates and drafts and endless papers. Well, in 2026, it's about reality. It's about enforcement. The rules of the road are here.
This quote from PwC is so important. They're basically saying that regulation isn't just a hurdle to jump over anymore. It's actually becoming the blueprint. It's designing the shape of the future market, and it's creating the safe, sturdy foundation that big institutional money has been waiting for. And that brings us to this key phrase you're going to hear a lot: compliance by design. Think of it like this. You can't build a skyscraper and then try to add the plumbing and electrical systems later. You have to design them in from the very beginning. That's what crypto projects have to do now. They have to build for compliance from day one, because that's the only way the big banks and the pension funds are ever going to get on board. It's the new price of admission.
So you've got these two incredibly powerful forces, this explosion in AI tech and this new reality of regulation. What happens when they finally collide with the market? Well, that brings us to our final act, the great debate, and a whole spectrum of possible futures.
I mean, just look at this table of Bitcoin price forecasts for this year. They are all over the map. You've got some analysts calling for a dip back to $75,000, and then you have others calling for a jaw-dropping $225,000.
The general feeling is definitely bullish, but the sheer size of that range, it just tells you how much uncertainty is still out there.
And you know what? It's pretty much the same story for Ethereum. You have the more buttoned-up, conservative, institutional folks targeting around $7,500. But then you have the mega bulls who are looking long-term and seeing a pathway to $20,000. And that's not just a bet on price. It's a bet that Wall Street might actually start moving its core systems onto blockchains like Ethereum.
So what do we do with all this? How do we make sense of it? Well, I think this quote from Alex Thorne over at Galaxy is the perfect reality check. Even with all these amazing new developments, the landscape is incredibly complex. The road ahead is anything but a straight line. This is definitely not a simple up-only market.
And that brings us right back to the one fundamental truth about crypto that has never, ever changed. The biggest risk is, and probably always will be, volatility. These new drivers, AI and regulation, they might raise the floor and they might raise the ceiling. But that potential for huge, stomach-churning price swings, that is still very much part of the game.
So we're left with this one final, massive question. With the raw power of AI pushing it forward and the guardrails of regulation giving it structure, is crypto finally about to become the new architecture for finance? Or are these powerful forces just creating a new, more complicated, and maybe even more unpredictable cycle of risk? The answer to that is going to define everything for the next decade.